Semiconductors are no longer carrying the whole tape. When the leaders rest and second-tier sectors bounce, welcome to Dragon Bullion. The market signal today is not that the bull case is dead. Korean semiconductor leaders still matter. While chips rest, some flows are moving toward biotech. That can look healthy on the surface. But this is not yet a clean, broad rally. A lot of the second-tier move is still expectation-driven. That means, if you already own strong AI hardware leaders at good prices, if you are new money, do not chase a tired leader. The checklist is M7 Bitcoin, Korean semiconductor relative strength, and the $1 exchange rate. If those hold together, if they break together, defense comes first. For the index frame, it is useful only if the Korean won currency. The AI theme is real. Chips, memory, data centers, power infrastructure. That is very different from the old software-led market where hardware cycles have a different risk profile. They need capital spending, factories, equipment. When demand slows or when customers delay orders, that is why a hardware-led AI cycle can correct. For US investors, Korea should still be understood through the AI memory and hardware chain. Samsung Electronics and SK Hynix are not random Korea trades. They are part of the global AI infrastructure supply chain. But because this is hardware, price discipline matters. The first thermometer is M7. Amazon, Nvidia, Google, Microsoft. If they're only digesting gains, that is one thing. If they fall deeply while second-tier names bounce, the second thermometer is Bitcoin. If Bitcoin cannot defend the $60,000 area, it can be a late rotation, not a new risk-on cycle. So do not read every bounce as strength. If M7 stops falling, if those leaders keep failing, a second-tier bounce should be treated carefully. Korea still has a strategic advantage in high-end semiconductors. That part of the thesis has not changed. The issue is price and timing. But that also means more volatility when the market questions the cycle. Samsung Electronics has a broader. The reference prices in today's report are Samsung Electronics near 323,000 won. Those are local Korea-listed shares. The message is not to abandon the leaders. The $1 exchange rate remains the macro pressure line. Around that zone, the question can change from supporting equities to defending the currency. That matters because Korean equities can rise even while the won is weak. If the $1 exchange rate moves quickly toward 1,600 and policymakers start talking more directly about currency defense or rate pressure, the good case is chip leadership with FX stability. The bad case is chip fatigue. That is the combination that should make investors reduce risk. WTI is also a macro check. If oil starts adding inflation pressure while the Korean won currency weakens, the buy plan has 4 gates. Second, third, fourth. If those gates line up, gradually is the key word. The reduce plan is also clear. Reduce if Korean semiconductor leaders give back gains on weak volume. Reduce. And do not chase altcoins before Bitcoin and Ethereum confirm. Here is the market core. A second-tier bounce is not automatically a healthy broad market. If they stabilize together, the pullback can become an entry. If they weaken together, cash and position control matter more than being early. Good assets still need good entries. The edge is to keep enough cash and patience for the next real reset.